Good evening, everybody, and welcome to this edition of Live Market Analysis, Monday, 8th of April. It's a pleasure to be with you at the new time of 9 o'clock Eastern Standard Time. If you're in Perth or anywhere that doesn't have daylight savings, obviously your time hasn't changed. It'll be this time for the next 6 months, I guess, until we go back to daylight savings. The disclaimer before we get started says that the content of this presentation is just information. It's it's not advice. You should consider that information very carefully and consider whether it's suitable for your objectives, your needs, your situation, or seek professional help to determine this. It's also important to remember that trading and investing is risky. Markets go up, markets go down. There is a high probability that you will lose money at some stage, and it's always your decision as to what you do with this information and not mine. So everything's up to you. With that in mind, get your requests rolling. Head over to your Google Meet window. There should be a place there where you can send me your requests. It could be anything from Aussie or US markets. It could also be crypto. It could be commodities. It could be bonds, or anything you're interested in talking about. Or it could be the 3 M's of trading: methodology, mindset, and money management. I'd like to, just from an admin perspective, get out of the way the offline requests first. It just makes it easier for me to do this. So I'm going to head over here to Amy Broker, and actually might as well start with a quick whip around the grounds. It is ironic sometimes, markets. We had this black candle here, which we said we're just going to take it a little bit easy. We're going to pare back on risk, not be so cavalier to add new risk, and really, that was sort of the extent of our caution at that stage. And then, we said we went back up. I can't remember when we last looked at it. Maybe it was here, and we said, I think it's safe enough to go back into the water fully. And of course, within a few candles, we get this giant black thing. That is not a good look, certainly not when it's in the vicinity in terms of price of the first one that we were concerned about. So going back to, a slightly more of a cautious approach, I'm not calling the end of the bull market by any stretch of the imagination. That would be foolish, but we are seeing these signs of supply coming in, taking really pot shots at demand, weakening demand. Really is probably the extent of it. And then, I don't know if you caught my tweet on Friday where I said, hey, look, be careful with this black candle, but also be mindful that the trends are still up, and it's just as likely we get a big white candle on the next one. And lo and behold, there it was. But, as good, as decent as that white candle is, the one at the end there, it really didn't push for me enough back up to the top of that range of where the supply is, and then that upper shadow is a little bit problematic. If I had to give that candle a score out of 10, if this candle really is an 8 or 9 out of 10 in terms of showing of supply, the only thing that probably didn't get it a higher value was there was just not much volume associated with it, very little volume. So yes, there was motivated supply, but there wasn't a lot of it. So the supply that was there wasn't a lot of it, but it was motivated. That's important. And it wasn't hitting much demand. That's the other important factor. So we've got a lack of really interest in the market, and you get these sort of a demand side pocket, and you get that black candle. The next day, look at the volume on that one, and we managed to get back up. So volatility without actual commitment is annoying and disturbing at the same time. And as I said, if I had to give this an 8 or 9 out of 10 in terms of it being supply, this is probably a 6, a warm 6.5 out of 10 only, as demand coming back the other way. So there's a net deficit there. So I think a little bit of caution. Of course, we'll see what setups we get today, and we'll to a large extent take them on a case by case basis. But I do think you just want to take it a little bit easy. Let me complete this whip around the grounds by looking at the other key risk on market in the US, which is the Russell 2000. And that's, if I had to give, what would you give that out of 10 in terms of the last candle? It's less than 5, isn't it? It's far less than 5. Really didn't penetrate into more than halfway up the previous bearish candles range, and then we closed maybe a third of the way up at best and well off the highs. And you can see the short-term trend ribbon is starting to change colour. It's converging, and we're not that far from closing beneath it. So I think this backs up what I said before about just taking a slightly more cautious approach. The S&P 500 is actually probably slightly better than the Nasdaq, and let us head to see if there's anything really sinister going on anywhere else around the world. I don't like that gap over there. So that's Friday's candle, the gap, and closed off the lows. Obviously, they closed before the US, so they didn't get the full benefit of that rally in the US. Heading to Germany, another significant black candle there. Looking at the FTSE, we've also got one there as well. Let me just make sure I'm at normal zoom. Heading into Asia, not a great deal of movement there in the Hang Seng. The Nikkei is sliding and getting close to closing beneath the short-term trend ribbon, but none of these are panic stations. Nifty 50 looks fine. The Shanghai Stock Exchange looks okay into the China A shares. Maybe that one is a little bit more disturbing in its pullback, but still going to classify it as okay. Bringing it home, there's our sort of black candle there in response. Is it? No, it's that one there is in response. That one was a little less obvious. I can't even recall what caused that one. Now, honestly, it doesn't matter, does it? But we're seeing the fingerprints of supply creeping in, but within very good trends. And again, all this means is you don't need to rush out and add new risk. You don't have to take risk off the table if you don't feel that way, but you don't have to rush out and add new risk. That's just my opinion. Let us head, while we're here, to we'll do some of the base metals, and we might pop on the line chart there. So strong rally in aluminium. That's impressive, isn't it? Copper, what we know, is doing very, very well. We'll have a look at the high-grade copper chart in a little bit. Iron ore is about to appear. I have to do my weekly dance where I get rid of the percentage sign, because the percentage sign makes it break. And if we zoom, that isn't, you zoom normal, there we go. We can see that iron ore has fallen there, but I'll show you another chart where we've actually got a big white candle on iron ore. On the candlestick chart, nickel is rallying, lead is rallying, tin is rallying, and zinc is rallying. Okay, so really what we're trying to do here is put all of these into one compartment, into one little bubble, and say, well, actually, where stocks are going risk off, base metals are actually subtly going risk on. That's both contradictory and impressive at the same time. Lithium carbonate is edging higher, but still very much stuck in the range, and that is the futures there, and then the spot. At least it's not going down anymore. Spodumene concentrate there is actually a half decent rally, I would put to you. Heading over to silver, this is the one that everybody's been talking about because it appears to be breaking out. I think incorrectly suggested to you that, the top of the range, it's a pretty impressive range. And then remember what I also say to you, of course, is that, we won't know what the supply response is going to be until we get there. And then if we see supply manifest itself at that level, there is supply there. If we see, on the other hand, something like a big white candle with a high close into the zone, we know supply is gone. Okay, and that speaks for itself. And if we zoom out here to the weekly chart to see where the higher retracements are, well, this one there at 28.74, and then the next one along is at $30. And with a big round number, I expect that one should hold, at least in the interim. But otherwise, in the weekly chart, that looks very, very strong. I can't fault that. And the big white candle high close, of course, it's Friday's close, means that there's still plenty of latent demand, excess demand in the system. This area now moves from a historical supply, which we know it was, to, we expect, future potential demand. So let me change the colour of that one. Gold is still chugging along just fine. In fact, look, I can't fault that. I keep telling you I'm not a gold bug, so I don't get overly carried away when I see that. That's That's probably unusual, isn't it? You probably expect a technical analysis commentator to get really gushy over that one, but it is a wonderful chart, and there's nothing in there which suggests that it can't keep going. It is a picture, it is a wall of excess demand at this point in time, so no complaints there. Let me finish off our whip around the grounds with, well, we're going to look at some silver stocks in a little while. Some requests have come through, but we might just show you that big white candle that's come in on the iron ore chart there, and I'm pausing because I'm trying to remember how to get to my chart with my annotations, which is not that one, but it will appear, and we'll talk about Bitcoin in a second. But there's the annotations there for iron ore. Obviously a key level, it was, I must admit, it did look done and dusted, but that's a substantial rally in that last candle, from a point where we should expect to see some demand manifest itself, and it has. The short-term downtrend ribbon will provide dynamic supply. Watch for the manifestation of that supply in black candles and upper shadows, and then probably 109.25 into 111.95 from there. Again, we'll be watching those levels. I think there's an opportunity here, given those base metals prices as well, to potentially look at some of our resources stocks. If you've got some, certainly send them through, and we'll see if there is any signs out there for a potential aggressive entry on some of those, because many of them have been beaten down over the last few weeks and months. I promised we'd look at high-grade copper, which is going very, very well. Again, nothing sinister in there to tell me that rally can't continue. If anything, we've got white candles and lower shadows, downward pointing shadows, which indicates we've got buy the dip activity. We are coming into 433 to 437.25, which we may manifest some supply in the candles there. Keep an eye out. Uranium is trying to make a higher trough at the long-term uptrend ribbon, and therefore hold or show that area is an area of dynamic demand, and we're holding 50-50 from here. I'd like to see it get above whatever that high is there. It's about 89.40. Let's call it $90. If it's trading back in the 90s, I think we're fine. If we start to push down and trade back in the mid 80s to low 80s, then I think we might be in trouble here of rolling over. But keep an eye out for that one. It's not hurting uranium stocks at this point in time, so that's a good thing. Moving over to crude oil, we'll head back to our candlesticks here. It looks fine. I can't see anything too sinister in the price action there to suggest that very moderate short-term uptrend can't continue, but we are, like some of these other commodities, getting into areas where we may see some supply come in, but happy to stay the course is the message there. For the people that love coal stocks, nothing's going on there in thermal coal, and we're seeing coking coal prices, met coal prices continue to plunge, probably in line with the iron ore price, but maybe also in line. They might see a bounce here, but I'm not one to predict. We've done gold, we've done silver, and I think we've done everything we need to do there. So I will very quickly head over to the Bitcoin chart, where we kind of started that, and show you, or ask the question again, what's wrong with this chart? And I can't see a lot wrong with it. If we had, in fact, we did decide to take 1/3 off the table. I think this last candle here is a plus 1/3. Now, it is a live candle. It won't finish for another 12 hours based upon trading view. But I think there's enough in it anyway to go back to an FRP on this one, full risk position. If you're not in it, you could add here. And you'd probably be looking at this point of demand here is a place where you'd be looking to bug out. So at least you can kind of work out what your risk is, your reward. I think it's open-ended from here. I'm pretty sure we are at or are in blue sky territory from here. We are indeed. So we're just playing round number games from here. Next one might be a bit of a whiff of 80, but you know, remember what I said about 80s people aren't really waiting to sell at 80s. And I think there's a bunch of people, including myself, waiting to sell at 100. So that's probably where the real supply is going to be. And we could get a vacuum. Until then, let's head back to Ethereum because we're here. It looks fine. Not as good as Bitcoin. Bitcoin is the main show. But you know, if you've got anything in crypto or any of these other asset classes that you'd like me to look at, certainly please let me know. I want to head over to the Chinese property indices. I know we're bouncing around a bit, but mainly just to do with the interface that I'm using. Not a lot of joy there on the Hang Seng Mainland Properties Index. I haven't looked at that one for a couple of weeks, and that looks bloody awful. There's your Hang Seng China property shares, and probably explains why those A shares as well aren't looking good. It is a property sector issue again. It continues to nag away at the Chinese economy, and surprising, or it makes those moves in base metals even more surprising perhaps. Are we seeing something more to do with what's happening with gold and fears of inflation not going away, or what is it? Interest rates. I mean, interest rates staying higher. That shouldn't help. It shouldn't help gold and other base metals, because there are substantial holding costs, carrying costs in those. So that doesn't make sense to me. We're looking for the canaries in the mine shaft again. We're heading to the US big banking index, but more importantly, the small banking index. Look, that one doesn't look great, but it's not screaming anything horrible just yet. Looking at bonds, and this is part of the problem. This is why stocks are starting to wobble. We're seeing bond prices, bond yields start to move back up in Australia, in Japan. A little bit disturbing there. We don't want to see those start to break up, because that will be a drag. It will just be this nagging drag at Australian equities. Australian equities, high yield market. Okay, a lot of money sits in your big four banks even, instead of sitting in domiciled at home in Japan in those big pension funds. Those big pension funds tend to look overseas for higher yields. Where do you get higher yields? You get them in Aussie banks. Heading over to the USA. Oh, see, there's the pain. That's the pain right there. That's just the twisting knife in the back of the bull market right now. Is that chart right there? And whilst that continues to look as good as it does, we're going to struggle a bit at home, but that doesn't mean there aren't pockets of excitement around the place. And we've already mentioned a few of those. PAAS, Pan American Silver. Look, it's just amazing price action, amazing candles. It didn't quite get the perfect turnaround play for me, because I wanted the pullback here. I didn't get it, and sometimes you have to say you missed it. It's pushed through here. This area of supply seems to be acting as demand now. That's very impressive. The only problems I had with this is, well, can I make a one-to-one reward to risk heading into somewhere between probably $18.60 into $19.70, $20 round number? That's up to you. If I had it 100%, I would hold on to it. If I didn't, you could just have a little tickle on this one to get part of the exposure, because it is a very, very strong setup otherwise. The next one we looked at was MAG, which is MAG Silver Corporation. A question whether this had slightly better reward to risk. I think we could have got one-to-one into sort of this zone here up to this zone, and that is with an entry at the current price and a stop under here, because I think this candle and this candle shadow low is enough. So you can kind of see just there, if that's your risk on your first exit, then you've got at least one-to-one when you start to get into this area up here. So I'm thinking that's probably my pick of the two so far. And then when we get to HL, which is Hecla, it was somewhere between the two. And again, it's just a matter of whether you can make one-to-one work. From a current entry, you could run a really tight stop probably under there, and maybe you can make that work. And no complaints running a full risk position if you had it. And then the last one, which wasn't as attractive as the first few for me, which is this one here, where we saw the more sketchy price action there, and the candles, overlapping price action and the sketchy candles. Apologies again for that. Okay, let us head over ADT. No surprise, it's doing well. It's got silver, it's got a bit of gold, if I'm not mistaken. It might even have some copper and some zinc, okay, but don't quote me on that one. So all of those metals doing pretty well. It is one that has very overlapping price action, and the candles are somewhat sketchy, but not terrible. I am talking about the weekly chart here, of course, so at least we know the weekly chart looks good. Let me go to the daily chart. I don't think that makes it look any better. I think the weekly chart looked better than the daily chart, but and I say that because of this candle here, and this upper shadow here, and this candle here, and this upper shadow here, and just the indecision we're having around $4. If I had it, I could hold it. I'd be concerned if we started to close, say, beneath 390. I'd be looking to manage my risk on that one, but happy to hold in the meantime. Would I be buying it? Not on the basis of that last candle there, but give me a nice white candle. Give me a nice white candle that closes somewhere above, say, 415 into 420, and I could happily add some risk on this one, on the basis that, as I said, the weekly chart is showing a really nice base pattern. So that's you and silver done. Stuart, I'm going to head to Peter, because Peter asked for IGO, and we'll do all the Aussie ones now. I don't know if Peter's asking about whether he can short this one. I think you can short it. I mean, short-term downtrend, long-term downtrend. The price action doesn't look great. The candles are predominantly black up until like the last few through here, though. I think you can find better shorts out there if that's what you're looking for. So that's being optimistic there, that Peter is asking me about a short trade, because obviously I can't buy this. I can't own it. I can't run any risk position on this at all. It's not setting up for an aggressive setup, is it? It's not a turnaround play, and it's certainly not a continuation setup. There are very few redeeming features here from the point of view of buying this thing. I could be wrong. Tomorrow it could print the most almighty white candle, or this could be the low. It's probably the better way to put it. This could be the low, and 6 months from now you would be absolutely just totally shouting at me horrible things for saying not to buy it here. But I can tell you, if it is going to be the best stock over the next 6 months, it will start that journey by putting in white candles. It'll start that journey by making rising peaks and rising troughs. It'll turn that pink trend ribbon into green ones. It'll move into that long-term trend ribbon. That long-term trend ribbon will turn orange, and it'll put in higher peaks and troughs in there as well. It'll do all those things. I just don't think you need to do anything with it now. While I'm here, let's have a look at the rest of lithium. Why not? Ditto doesn't look completely horrible, but it's hardly anything to get excited about. Big white candle, higher peaks, higher troughs. You could start to look at it maybe on a move above 410 again, I think, but not until then. I don't think that looks very interesting at all. And we saw lithium prices are rallying, but is it having an impact here? Mineral Resources looks the best, which is pretty amazing when you consider that iron ore prices tanked. So for whatever reason, it's got nothing to do with what I think about the company, but clearly the market thinks there's value here, despite everything that commodity prices have thrown at this one. That's very impressive. If I had that, I could hold it. If I had IGO, I would happily sell IGO and buy Mineral Resources instead. Okay, just on the basis of those two charts, if I wanted to maintain exposure in that sector. Okay, now Mineral Resources could be the worst stock over the next 6 months, and IGO could be the best, but I doubt it. What else have we got here? LTR scraping the bottom of the barrel. No need to spend any more time on that one. And then you've got the really, really bad stuff, unfortunately. And I do feel for people who are stuck in these things. Sayona, core, they're just really, there's no pulse there whatsoever on any of them. I feel like I'm missing some obvious ones. LTM looks bloody awful. I can't see really anything but Mineral Resources showing any light at the end of the tunnel in lithium at the moment. So let's, I've done that one. AZJ looks good actually. So we've gone from lithium to trains, transport company, and these guys move those minerals around. So I guess when the mining's good, this is probably going to do well. The price action is okay. There's lots of overlap. The candles aren't ideal. There's lots of sketchiness in them. Apart from that, I think it's fine. If I had it, I could hold it. If there's something about this I loved, like the dividend yield or whatever the hell it is, then the chart is facilitating me to hold it. Probably not a buyer on my own accord. It's just a bit ho-hum. It's just a bit slow and steady. And, the leopard doesn't really change its spots. And, in terms of reward to risk, not all that exciting on the weekly chart either, with a couple of levels not too far away. But, whatever floats your boat, if this is the one that you like, there's nothing in that chart that tells me that you can't own it. All right, that's all the ASX offline requests. Let me head over to, actually, I should do this one, BHP. I'm going to do a quick case study here, and I promise it won't take more than 3 minutes. It's one that's come in from, I can't remember, I didn't write down the name of the person that's come in, but they said, Carl, can I take you up on this offer you made for us to do some case studies? And I haven't done one yet, so I thought, well, I might do one tonight. And you might not be interested in BHP. It's not about that. It's about saying, well, what would you have done given the circumstances? And we wanted to go back to quote unquote late 2020, which is about here. And I know you kind of saw what happened, but you won't remember what happened exactly. And let's say this is about as late 2020 as we can get. What would we be doing with it? And then we'll just kind of try to skip forward a little bit. And as I said, I've got my timer here. It's 7:35 local time. At 7:38, I'm going to finish the case study. The other thing that Peter actually is asking about, and I'm actually going to do this, is head to the weekly charts. Peter says, look, I'm a longer term investor. Here's the other part of it. And actually I'm going to look at Pilbara for you as well on that basis. And he asked about what time frame should he use? And I think he's referring to what periodicity. And if you are a longer term investor, now I think daily charts is too short term for you. Okay, you're going to be riding that roller coaster of market emotion every day. And I'm talking, for example, if you self-managed super fund, there's no rule that says you can't have two buckets of money. There's no rule that says you can't have a bucket of money over here that manages where your self-managed super fund is being managed using weekly charts and only weekly charts. And a bucket of money over here where you're trading. You want to be a bit more active. You do enjoy the roller coaster of the market, but you also enjoy being in and out a little bit more. Not having to wait so long after a peak to manage your risk and get your money out. Not having to wait so long after a trough to get in potentially. Why can't you have both? But you have a trading system running this with weekly chart periodicity, only looking at the markets once a week for your self-managed super fund, and then over here, looking at the market on a daily basis. And they're two separate. It is possible, in theory, for you to be long over here and short over here. Unlikely, but possible. Unlikely because you're following trends. If the trend's up on the weekly chart, it's probably still up on the daily chart. But you get what I mean. Or let me put it a different way. It's possible that you've got a full risk position on a stock in your super fund, yet you are scaling out of it in your shorter term trading portfolio. Okay, and then only later on you start to scale out of it in your weekly chart, because the weekly chart doesn't see the daily chart, the daily chart doesn't see the weekly chart. So on that basis, let me do this. Did I say 3 minutes from now? From then, 3 minutes from now. It's kind of after the COVID low. I mean, maybe we can look at it on that basis. And well, where would we have actually got back in? Let's say the next major market calamities hit. We don't know what's going to happen. Think of the uncertainty at that time. And where are we getting in? Let's say we never had BHP. I don't think it's there yet. I'm looking at, and again, everything we do on the daily chart, we do on the weekly chart. You don't have to change your analysis at all, but you're automatically 5 times longer term. I don't think we need to do anything there. Not there, nor there, nor there, nor there, nor there. That's starting to look interesting for me as an aggressive entry. I might want one more candle just to confirm. That one's not bad. That's probably where you're going to add some risk to this one. If you did want to go a little bit more aggressive before, it's definitely a turnaround setup now, without a doubt, because we've got contraction, we've got a push into the long-term trend ribbon, we've got a pullback, the pullback I keep asking for. We've actually got some nice candles in that pullback and then pushing through. So I can see a reason to add plus 1/3 there. It would have been better to have a higher close, but certainly if you didn't do it on that one with the shadow, you would do it there. I don't think we need to manage our risk on that one. I'm starting to get concerned. We're okay. What this does is give me an area just under this short-term trend ribbon where I would be managing my risk. If it started to go wrong, I think we're fine. I'd add another 1/3 here. I don't see why you wouldn't. That's disappointing. That's really disappointing. Oh, I'm very tetchy here. Another big black candle would cause me to manage my risk. That's okay. I didn't get it. I'm probably going to add another 1/3 on that one. So I've got a full risk position on BHP. I didn't get in at the bottom, but somewhere, so maybe even between 28 or 30, an average price of $31 or $32. But at least we got in with some demand behind us. Don't think we need to manage the risk. That's disturbing. Cleansing beneath here. I'm probably going to knock a 1/3 off the table there and take my medicine. Knock another 1/3 off. Knock another 1/3 off. Oh, well, it didn't happen, did it? Didn't work out for us. And I suspect we're going to regret that. Back in another 1/3. I didn't pick the starting date on this one. Back in another 1/3. Oh, gosh, that's frustrating. And what we don't know here is dividends, and that could play a role as well. Happy to continue to add a 1/3 there, but mindful that we're getting close to $50. Still okay. Off. And I don't know what that was. And what month of the year is it? So probably not a dividend. August, no, there will be a dividend in August. Some of that will be a dividend, and that's what makes this a little bit tricky. But yeah, you're probably all out on that candle, to be honest. It's a species-ending event. So I don't think we've done poorly. I could go an aggressive 1/3 here. Skip the candle ahead. Add another 1/3 on this candle here, and or the next one. We're okay. Gosh, it's volatile, isn't it? back up again. Oh, you go minus a third on that one. Oh gosh, of all the ones we could have picked, minus a third, and we're in 2022. Not interested now. You got an aggressive third here. Again, this is for a weekly chart. I got another third, but we're close to 50. It's up to you whether you knock some out there at $50. You're probably taking some profit off the table from your first third. Knocking out a third there. Gosh, wild. Yeah, it skipped to the end. Anyway, probably not the ideal one to use, but demonstration of how we can think through the process of on a weekly chart and having going back and doing a bit of work on one that actually has occurred. Just to round this conversation out, we're looking at Pilbara on the weekly chart again for, I can't remember who, but I don't know. I can't see any reason to run a full risk position here. If I had it, I could hold it on the basis that this is good, this is good, this is good, this is holding, this is good, but this is nullifying it to a large extent. If you had it, I could hold it. That's all. Let's just say that. If it closed beneath here, I think that thesis would very much change. If I start to see nice white candles, then I can add some risk from there, because it's actually not too bad on that basis. Okay, let us keep moving. Let's do your requests now online. We're going to go back to the daily chart, and we're going to go to AWC. Looks fine. If I had it, I would hold it. There's absolutely nothing in there that's telling me that I need to manage my risk at this stage. Remember what we saw on that crazy chart of BHP, the weekly chart. Oh my gosh. I have nightmares about that one. Imagine coming back after a week and just seeing that huge black candle in August 20. What the hell happened in August 2022? And that is a problem of weekly charts, isn't it? You're going to miss that sensitivity at some point. But you'll also be happy that you didn't jump at shadows in between on occasion. The only issue I have on this one is the potential supply point that's up here. We're seeing supply manifest itself at this stage. I don't want to see it get any worse. I don't want to see something like this happen. That would be bearish. We are forming a little trough in here, so a close beneath that would cause me to manage my risk. We don't need to do it at this stage at all. A big black candle somewhere in here. Big black candle, upper shadow, pushing into that range, confirming the supply, might cause me to manage my risk. But these are all hypotheticals. There's nothing to do in the meantime. I can't get in because I'm so close to this big area here. If I can get a little bit closer to it with a nice big white candle that tells me we've thought about it, we've respected it, it's not a problem anymore, that would be better. But then I note that we're not far away from the next one. So to some extent, or at some point in time, you're going to have to say, well, I've kind of missed it if I'm not in it. And it's just about managing the trade if I am in it still. Okay, let's go to SVL, which is obviously one of the local silver stocks. I'm not sure if it's a producer at this stage. I know it's had a checkered history. Okay, that's the weekly chart. If you thought the BHP weekly chart was choppy, that's this one. It's a serial underperformer. It has periods where silver looks good and it looks good, and then silver goes back to what silver does, and then this is absolutely rubbish for months and often years on end. And I would really caution against charts that have such overlapping price action candles anyway. But this one, I know just too much about it. So first thing I'll say, it's not for me. I wouldn't trade this. But if you want to trade it because you think silver's going up, I think there are better ways to do it. We saw about 5 of them earlier on in the presentation, and you could just go long silver through a CFD account if you wanted to. Have I said enough? Probably have. Tell us what you really think about silver mines, Carl. There's a bit of supply in here at 21. I couldn't buy it on that basis anyway. Maybe on a pullback with the right candles, it could start to look better. But this will be a plaything. This will be a silver plaything for as long as silver's hot. And then when silver's not, this one's going to go back to being a piece of junk. MMI, This one looks fine. Hey, Carl, can't SVL trend like this one? This one's also overlapping. Yeah, it could, absolutely. No problems with this one. Happy holder here. Absolutely nothing in that chart to suggest anything but continue to hold it. In terms of the weekly chart where we might find some supply coming in, yeah, there's probably a little bit up here. But I think we're miles away from that, so I don't think we need to worry about that just yet. So happy holder. If I didn't have it, and I'm looking for a small mining stock with a huge amount of paper out there, that's why you get this movement, because there's just immense amounts of paper out there. By that I mean shares on issue. Then certainly this could be the one for you. No objections at all. Don't get me wrong, but there are probably cleaner charts and cleaner price action out there. XAM, are we finding one here? I think we have found this price action actually looks really good to me. Xanadu Mines, this one rings a bell. We talked about this recently. Maybe for an aggressive setup. Certainly there's an aggressive setup. That's a turnaround play. That's another 1/3 there. Today's candle's fine. I can happily add a third on this one. If I had to choose between this one and the first two, Silver Mines and MMI, I would go for this one as my spec of the day, if that's what I was looking for. This one looks much better in terms of candles, price action, and trends. Let's go to HCH, Hot Chili. Again, another one. So think of Hot Chili as the silver mines of copper, okay? When copper's going absolutely ballistic, this starts to look good, and then inevitably copper stops looking good, and then this is rubbish for months and or years. If you've traded this, if you've owned this, you know I'm not criticizing this company. You know this is just the reality of this company as it is for silver mines. Today's candle is disappointing. I couldn't buy it on that basis. If I had it, I could still hold it. Today's candle is probably not enough in itself to manage my risk just yet, but it's concerning. I don't want to see another big follow-up like that. That would be disturbing. Look, ultimately, here's your demand zone. It really needs to hold and respect this zone here for it to be okay. As long as it continues to trade in and above that area, I think we're fine. But again, just be careful in trying to find, I think the big risk is you go, copper's hot, Google ASX copper stocks, and find the one that hasn't gone up yet. I just think that's a bit risky. But they can move when it's their time. Terry also asking for SVL. That's the third request for SVL today. Case in point. I think you're all proving my point here. Let's go to ETPMAG. ETPMAG, which is the silver, the physical silver. Now you're kind of talking my language. I think if you want to trade it, this is where you trade it, because this is the closest thing you can get on the ASX to buying silver. You might get better bang for your buck with a CFD. You'll get leverage there if that's what you're after. It means you can put up a smaller amount to control a bigger amount. You'll probably have the similar sorts of financing costs, because there'll be time erosion built into this, I'm guessing. Certainly there'll be some sort of carry cost built into it. Other than that, this is the best chart we've seen out of any of them. The round numbers are irrelevant here, okay, because it's an ETF, but that's the way I would do it. Yep. So I'm glad you brought that one up for us, Andrew. Thoughts on investing in physically backed instruments versus equities? Okay, very good question. Hands down, go the physical. I know I've said this a dozen times to you, but there are problems with equities. What do we see recently? Was it WAF or wasn't that one WGX? Yeah, there you go, WGX. Now, I would have said, and we talked about this last week, so I'm actually glad you brought this up, that we said, look, this is probably the best gold chart out there. Of course it is. Look at it. It's magic. It is a picture of excess demand. And then the next day, what happens? Murphy's Law, they announced, I don't even know what they announced. I don't care, but it wasn't good. And gold is, for the next however many days, gold has continued to make record highs. And look at this one. People are pulling their money out of this because of the bad news and putting in everything else. When you buy a stock, you are buying a giant ball of risk. If you're buying that ball of risk because it's moving based upon an underlying theme or commodity, you are taking on all of the risks of a going concern, of management, of costs, of mine collapses, failures. SSR is another good example. Imagine if SSR was your only gold stock. in this gold bull market, how devastated you'd be. And of course, you wouldn't buy anything else, would you? You'd be kicking yourself, I can't make myself buy anything else. SSR's the only one I can own. Yeah, I'm all for going for the physical, Andrew. I think that is a great idea. Okay, let's go to OBM. And we're going for time, pick up the pace. Ora Banda Mining, another gold company. How about that? Should we be buying gold? We go literally GOLD. Nobody's asked me about this. You've all asked me about 10, 15 different gold stocks over the last month or so, and nobody's asked me about this. Yet, have a look at this chart. Oh, Carl, it's too late. I've missed it. Look, I don't know. That depends on where the gold price is going, but I think this is the much better way to play it. Having said that, the question you did ask me about was about OBM, and it is gradually grinding higher, isn't it? There you go. On a percentage basis, it's probably holding its own. I can't see anything in the OBM chart to suggest to me that it can't continue to go higher. I'm not worried about today's candle. It's fine. Trends are good. If I didn't have it, could I buy it? Or could I buy maybe something that's backed by gold itself, probably leaning the other way. COE is a small energy company, still looks fine, no complaints there. Let me just check for you if there's anything sinister lurking around the place. Is this sinister? Yeah, a little bit sinister, but not for a little while. I think we've got a little bit of leeway until we get there. Let me just show you where that is. There you go, you're probably fine. In the meantime, happy holder. Would I buy that? If I'm looking for small, overlapping, sketchy candles, overlapping price action, sketchy candles on a stock that has zillions in paper out there, absolutely, this is the one I would go for, because it is looking better than all of the other ones that have zillions of paper out there. FSM looks tremendous. Let me go back to the weekly chart. Still looks tremendous. We're above that level. There's a bit of a level there. Let's call that 550. Come back to the daily chart, and 550 is miles away. So where's, from my bug out, say sub 430. If I'm going to work on that basis, then I should be able to get 1-to-1 into 550. No complaints. If you've got it, I'm a happy holder. If you don't have it, because of its distance to the light green zone, we're not putting a full 1/3 just on this one. I think you might just pare that back a little bit and just get some skin in the game here. And that's all we're really trying to do on silver. You might say skin in the game on 3 of them that we've looked at today, and that in itself adds up to 1/3. No coincidence why I said that. Skin in the game on 3 of them, and that adds up to 1/3 of risk on 1 of them. But at least I've spread my risk a little bit around. Okay, and hey, if they continue to go well, I'll add risk in that nature, in that fashion. But I think we're all just getting a little bit carried away here. Can we do PDN, Paladin and Liontown? Certainly can. I will not forget to change the screen this time. We will not do that again, ever again. PDN looks great today. Great candle today. Morgan Stanley initiated Paladin at an overweight position with a 175 price target. I think that helped it today because uranium did nothing. But it's just a nice chart, just good trends, good price action for now, I think. These last 4 candles are a little bit problematic, but today's candle wipes out any supplies in the system. And I think, look at taking some profit, certainly into 2 if you're lucky enough to get there. But in the meantime, again, taking some profit into big black candles, upper shadows, be ruthless with your uranium stocks still. But in the meantime, I think you're fine. Could I add risk to this based upon the candle I see? Absolutely, I could. If I had it, I'm a full risk position. If I don't have it, I can add risk on the basis of that candle. Let's do Liontown. I did. I think the words I used were scraping the bottom of the barrel here. I'm not going to change that now. I'm looking at it a little bit more closely. Is there need for an aggressive setup here? No. I think the aggressive setup was on this candle and this candle. That's where I would have gone aggressive, or certainly here. Maybe not any earlier than that, but any of those 3, I can see that the possibility of an aggressive setup. This would have been an exit right there, quite possibly more than 1/3, and certainly on that one another 1/3, and on that one or that one 1/3 again. So you might have made some money out of that trade. Now I don't think there's any reason at all to still be in this one. Let's go, time to get into LTR. Yep, that's the exact answer I just provided. Let's go to Barry's got 3DA, which looks fantastic. No complaints. Again, it's a little bit more overlapping in the price action. The candles are somewhat sketchy, but nowhere near as bad as some of the other ones we've seen. Let me go to the weekly chart. All good here. I don't think there's anything really bad to worry about, probably until we get up to there, and maybe that, but I'm not too fussed about that. It doesn't look like it's a big deal. From where we are, happy holder. Could I add some risk to this? I don't see why not. If I like the story, I could certainly add some risk to that one. It might be a little bit slow and steady, that's all. AIS is a copper stock, so we're going from our silver stocks to our copper stocks. And look, short-term uptrend, price action looks okay. We're interacting with the long-term trend ribbon, big ticks. They're all ticks for a turnaround play. We're starting to see the amber coming in. Look, I don't mind it. If I saw a nice white candle or a big lower shadow, I could have a crack at this one. Where's it going? 22s, 24s, from 18, 30%. I think I can find better stuff to do with my money than this one. But if you like it, if it's something you already hold, you've got some sort of affinity with the company, because it's copper or whatever it is, I can, obviously based upon my comments, see a reason to hold it. I'm not sure I'm rushing in to buy it if I don't. E25, an aggressive setup. I could go an aggressive setup here if it had more volume, and it just doesn't. There's just not enough interest here for me. If there was a big surge of volume, those two candles would be enough for me to just take a little bit of a bite on it. In the absence of that volume and that interest, a little bit more circumspect. Hey, if you really, really love it, I wouldn't say necessarily run out and buy it, but I'd say keep an eye on it and wait for some nice price action. Another nice little high trough hook here, another white candle, lower shadow. If you like the story, again. I mean, I say that because some people genuinely read about these things. They like the idea, the concepts. They want to be part of that story. That's not me. Okay. I need to see the technicals to back it up, and I'm not seeing them just yet. 4DS. No, there's nothing there. That's definitely daily Charlie chart. It kind of looked like a weekly chart there. No, I can't see any reason to have risk on this at this stage. I know I'm a broken record, white candles, low shadows, maybe, but I just think there's too many things that need to occur here, unfortunately, to get me in. There's just too many parts of the puzzle lacking. If I had to give this a score out of 10, we're about a 2 or a 3. If I'm looking for an 8 or a 9 to get in, and this is a really important point to make, what do you want? Do you want 2s, 3s, 4s, 5s, 6s? We've seen so many of those today. Do you want 8 or 9s out of 10s? Do you want 10 out of 10s? This is not going to cut it. I'm happy to go over them, don't get me wrong. This is your session, not mine. I just sit here and talk for an hour or so. Peninsula, I think I'm going to say ditto on everything I just said in the last 60 seconds. Some people undoubtedly have consumed every piece of information out there on Peninsula and convinced themselves that this is going to be the next big thing in uranium, and that may well be the case, but it just doesn't look like it's a case right now. I could get interested maybe in a nice big white candle, a big flourish of volume. Kind of had one the other day, not sure why, but no, let me see a big white candle with some volume closing very close to 15 cents. And then it's going to start to look interesting. Until then, it is another one of those sketchy price actions with not a lot to go on in the candles either. Sorry, Linda. Karoon, let's see if we're going any better with Karoon. BPT is another serial disappointer today. I know I'm going off topic here, but BPT, that chart looked great. And then look what it does today. Serial disappointer. Frustrating. I feel your frustration on that one. Karoon is somewhat of a disappointer as well. Last two candles are a little bit concerning, but not enough for me, if I had it, to warrant managing my risk at this stage. If you're wondering what I'm talking about, I don't like that upper shadow, and I don't like the black candle today. It's telling me there's supply coming into the system. Where's it coming into the system? Is it coming in around here? Not really. It's probably just a bit lower than that level. So I don't think it's supply manifesting at this level. And I do think this level is going to be important here. So this is going to be a major point of supply. major point of supply going forward. Demand, here's your demand. This is your demand zone in here. As long as it stays above there, I think you're okay. Having said that, if I did see big black candles in the meantime, something that sort of resembled that, then I just the trend isn't strong enough for me to give it any more of the benefit of the doubt than it deserves. You know what I mean? If I saw something like that, I'd be starting to manage my risk. I can't buy this one for obvious reasons. All the reasons I just gave you, they're not. It's not screaming demand, but just speaking in terms of if I had it, what I would do with it. Let's keep moving to the US stocks at the end. Michael, Wayne, spodumene. There's a couple of spodumines to look at. That's one of them. So there's a nice turnaround. That looks like a V-shaped recovery to me, but we don't have a lot of chart there. If I zoomed it out, we'll see that it's like a tick, or a reverse tick. If you imagine a reverse tick so far, because it did come down from about close to 8,000, depending on which contract you looked at, down to 800, so lost 90% of its value, and then it's rallied about 20% of what it had left. But that's fine. Don't get me wrong. It's now in an uptrend. It's making high peaks and high troughs. This is the Platts Global S&P Platts Global AU assessment for 6% spodumene concentrate, and the other one that we have for you. Who is this? Sorry, I've forgotten. Wayne is this one here, which we mentioned earlier on, and it's just kind of just bouncing more gradually off the bottom, but in a very, very reasonable uptrend until then. But this one does have more history, and it does put into perspective effectively what we're seeing here. So when things fall very quickly, if they don't bounce very quickly, generally there's a problem. We tend to be more in the bounce along the bottom scenario, which is what I've said to you many times that I expected to happen with lithium rather than the V-shaped recovery. But it does appear for the short and probably even medium term that the bloodletting has been staunched at this stage. Okay, we've got a tourniquet on the broken leg with the bone sticking out. Such as lithium. Carl, can we look at Qantas? Absolutely. I'm actually quite interested to look at Qantas. Haven't looked at that one for a little while. I was going to say, last look, it was heading back down the other way, and then look, it's kind of heading back up now, isn't it? Wild candles here. Look at that big black candle there, and then almost exclusively white candles into here. Is it an aggressive setup? I don't think so. Just with this upper shadow here, this is a very good candle, and I love the fact we've just got so many white candles. There is definitely accumulation going on here, but it's kind of accumulation within the boundaries of a well-defined trading range. So yeah, you've obviously got the supply up there. You've got a bit of demand. It looks like sort of in this area here, the price levels are a bit spongy. It's probably more of a trading range at this stage. However, if it can do something like this, it can get up there, pull back a little way, maybe put in a little pattern like that, and I think you know the one I'm talking about, push up, little pull back there, nice lower shadows popping in on the pullback, and then white candle printing again. It's probably going to be an entry for me. In fact, it'll be a turnaround set up by then. And I think this is the level up here. I think this is the level up here, and I think we could easily make one-to-one on that basis into there. So I think we're dealing with this. Okay, so what are we dealing with right now? We're dealing with this. This was a demand. This was a major point of demand, and major points of demand into the future tend to act as major points of supply. And that one certainly did. What about STK? I like this one. Look at that, exclusively white candles. It's going really well in terms of the ground it's making, and I love the fact that it's pushed off the two trend ribbons there. So I think this looks very good. There's just a little bit of supply to deal with here, but it doesn't seem concerned about that at all. You might want to wait for a little bit of a pullback there to see if supply does manifest. I don't think you need to. I'd happily add 1/3 to this one on the basis of what I can see. I think there was reason to do it earlier. So I think for you, Barry, I'm sure you would have been all over it on that candle already. In fact, that candle as well. Maybe not that one. Maybe that's a little bit too early. But if you were lucky enough to see it on that day, I can see absolutely why you might go an aggressive setup on that day. But I think the other two are more obvious for me. Let's go to ARL. No, AMI. Where am I? I'm lost. I've done all of those. AMI is going up. Aurizon Metals, another copper stock, if I'm not mistaken. I don't think it's producing though. I'm pretty sure it's not producing yet. I know that because I wrote an article today on copper producers and this wasn't in it. But this is one of the better looking copper charts out there. I just love the fact that you've just got so many white candles. You pushed into here, you had a very shallow pullback, and then you're going off again off the light green ribbon. So as far as tiny Aussie mining companies with lots of script out there, overlapping price action and sketchy candles. Actually, this is probably moving closer to the top of the list as well. I've got no objections to owning this if you have it, and there's no reason to run anything but a full risk position. And if you don't, then I'd happily add 1/3 on that one. That's one of the better little stocks we've seen today, certainly. But hopefully it also puts into perspective some of the ones where I might have been less than kind. We're going to go to ARL. Which also looks good as well. Adriatic Resources does not ring a bell. We're interacting with supply. So, this is why I go back and I say, look, we could have some problems here at supply. I don't say those things flippantly. I think we are interacting with that level, but we're holding up pretty well. There's a bit of supply here, not a great deal of supply. I think demand's doing okay. I don't want to see it close beneath this trough low there. Although it's not game over because, the trend ribbon's probably going to kick in somewhere around here as well. So happy, look, I'm a holder if I've got it. If I don't have it, I think it's too close to this. Unfortunately, it's too close to that supply zone to do much with it. But maybe one for the holders, if you've got it, then you can hang on to it. But, again, there's a few problems there at the end in terms of where we might need to manage our risk in the not too distant future. Certainly beneath the short-term uptrend ribbon, I think we're in a bit of trouble. Cardno CDD has been doing well. It's been doing very well. Zoom normal. That's. I'm just trying to make sense of this. I'm getting confused with CDA, aren't I? Which has been doing well with that one. Codan. Getting confused with that one. This, I'm pretty sure, is an engineering company, if I'm not mistaken. Not sure what to make of that, because look at this. I don't know what I'm supposed to do with all of this. So it looks like something that moves and then doesn't move for a very long time. So I'm concerned that it's moved. If I had it, I could hold it. If I didn't have it, I'm going to just shy away from it on the basis that that is one of the weirdest charts I've ever seen in my entire life. How did you find that one, David? Thoughts on ASX Cardno? Okay. Hecla. Oh, it's a nice little rally there. We are coming into a bit of supply here. Is this still a uranium company, or has it changed to something else? It's probably changed by now. Is there an aggressive setup? Oh, maybe if I squint down here, but even then, that's tough to call that one. So let's say no. Could I buy it here? I think it looks very good here in terms of its price action and its candles, and there's definitely some interest coming into it. I'm just concerned about the proximity to this supply zone, so I'm going to pass on that one. But if I had it, I'd happily hold it and see where it could go. If we get to that supply zone, we're printing white candles, there's nothing to worry about. If we get to that supply zone and we're just starting to do what the 1-2 before ARL was doing, then we've got a bit of a problem. This one's from Michael. Can I look at Zip? Can do. Oh, well, there you go. That was going gangbusters as well. This, I'm pretty sure for you, Michael, what you would have done on this day here. I'm sure that you would have gone, don't like that one. I'm going to go minus 1/3 as a precautionary measure. This candle is not great here, and I'm very close to going another 1/3. The close beneath that low there is the problem, and we tickled it today. If you could give it slightly more leeway and go under this candle, but yeah, I think the likelihood of you holding any risk in this one on a close beneath the lower of those two arrows, I think it's pretty unlikely that you want to be holding any risk. I can't see a reason to run a full risk position at this stage. Okay. I'm sure you're all over that one. NXL. I think we've got some problems here. Today is, again, Michael, no doubt today you took the action and you went minus 1/3. I'm sure you're all over these things. Today, minus 1/3. Would you have done it on that day? Look, I don't think that's enough to do it on that day. Today is the screamer. Today is the screamer, minus 1/3. Do not pass go, do not collect $200. It means you've still got 2/3 on it. I certainly would be very concerned if we were to close beneath here. And yeah, looking at that chart, the combination of these candles, I wouldn't mind only having plus 1/3 on it, but I can understand if you've still got 2/3, why you might be that way. But I think I'm just sort of on the way out on this one, just for the time being. I can always add risk if it starts to go back up, but yes, it has not done well. And maybe, I don't know, is there a dividend there? I don't know, but a bit concerned about that one. HLO. This one's still okay. We don't want to see it really, you've got a little trough there again. That was tickling the other trough. I can say with confidence, close less than is minus 1/3. Would I go an extra third, because we do have lower peaks in the system already, and that's probably something I missed on the last Newix chart as well. I'm not sure why that's not working. So lower peaks, I think at a close beneath there you can go 2/3. Lower peaks, closing beneath the trough. Yeah, you're gonna have two lower peaks if you get down there. So where are the peaks? That's a peak. Call it MTP, medium-term peak. And if we get down there, this one will form as a medium-term peak. So you can have two lower peaks and effectively closing beneath two troughs. So I can't see any reason why you would have any more than 1/3 if you really felt you needed to beneath that level. And let me just go back to NXL and just double check. See, that one actually didn't print a lower peak until really today, you're taking out that trough. So that one's probably more of a 1/3 at this stage, but I'm edging towards 2/3 on that just on the basis of the candles. Let's go to, so managing our risk. We're seeing how the market is changing on some of these high-flying stocks. This one's still fine. No need, I think, to manage your risk just yet if you haven't, but certainly beneath there with a, like a full black candle. It's like full black, close less than, and then I'm probably going to go 2/3 under there, more than a third, and then your final third would come out, I think, under here. In the meantime, nothing to do but hold. Would I add risk on the basis of today's candle? No, I don't think so. I think I'm a bit concerned by what's happened up here, 250 as well. I think just sit tight with the risk that you have at this stage would be my view, and then those are the points you want to manage your risk. Let's go to, I'm just trying to clean up all these Aussie ones. BPT. But we talked about BPT. Total, utter, just frustration that this management team continues to just disappoint. When have they ever had a good announcement, these guys? I mean, if you own Beach Petroleum, I don't own it, but I know the history of it. If you own this thing, you must just absolutely poop yourself when they go into a trading halt, because it's never a good announcement. Let's go to BXB. Still looks good. One of the best looking charts on the Australian market that we've seen tonight, easily. Head out to the weekly chart and it's all blue sky from here. It's even better. These two candles aren't ideal, but within the context of the bigger, broader trend, they're pretty minor. I don't think you would have managed your risk on those. And then we're just holding above that light green zone. It's happy days. If I had it, I'm a full risk position. If I didn't have it, I think I could add some. I mean, those two candles a little bit disturbing, but even today's candle, bit of an upper shadow. I could probably just add a third anyway. It really is that strong at this stage. That is if you're looking for risk. If you're shopping for risk, that's a very, very strong continuation setup right there. We have looked at OBM for you already. This one here is fine, I think we said, and TGM was the other one here, which I think it's okay. A bit disturbing, isn't it, that combination there at 19? But it seems to be holding the light green zone at this stage. So I think if you're managing risk here, that's that big black candle, but it's so sketchy. It's hard to comment when you've got such sketchy candles, Robert. So I'm just going to err on the side of just hang in there. It's very close to managing risk. But when you have such volatility and lack of volume, you can get these black candles out of nowhere for not a lot of good reason. I mean, there's very few. I mean, look at the volume on that day. So it does make it hard for me. I mean, look at the volume there. It traded 300,000 shares on a 17-cent stock. So do you say, well, that's a big black candle, I have to get out? Or do you say, well, it's just sketchy. It's just a sketchy chart. I'm just going to err on the side of, okay, hang in there with the full risk position if you had it, but we're very close to managing our risk on it. If I don't have it, I need to see a what? See a what? A white candle, preferably, lower shadow. Anything can happen on that chart, unfortunately. Yeah, sometimes they're not easy to decipher. I apologise. TCG. Another one from Robert here. This one is better, certainly in the price action. Turako Gold. Well, it's got gold in the name. That's helpful. I'm a happy holder. If I had it, 100% full risk position. If I didn't have it, I could add some risk to this one. Let me just zoom out and see if there's anything I need. There's nothing I need to worry about. Happy with that one. So we are finding, what's really great about today is we've had this juxtaposition of some really, let's call them tough stocks to analyse because of their price action candles are really sketchy and they're slow and grinding. And then we've had some other small ones where you can see the cleanliness of the price action. So you can say, okay, I kind of get this. I kind of get where Carl's going on the ones that look better, on the ones I'm in the high, single digits rather than I'm sub 5 on in terms of a score out of 10. So we've actually had some really neat ones in that regard. Thanks, Robert. Let's go to skip my message on SVL, says Amber. No, I did SVL at least 2 or 3 times. Maybe I did it after I'm getting to your message, Amber. And I did, I did these. I did AWC, I did those again. Maybe you copied and pasted them. I definitely did them. Check the recording. From Chris. Newmont. Yeah, I very much want to look at Newmont because obviously gold's going berserk. We don't have a lot of chart here because it's the old Newcrest mining. We don't have that price action, unfortunately. But this looks good. This looks very good from what I can see because I can see a lot of accumulation here. I can see by the dip. I can see great price action. We are getting up here into this area. I don't know how important that's going to be given there's not a huge track record here. And I don't think people are going to be that caught up on that level at 62 on that basis. If I had it 100%, I would hold it. If I didn't have it, I could add to this. I know it's close to that, but on the balance of everything else I can see, I could add some risk to this. We did have a long conversation about whether we're going to buy gold stocks or buy gold as well. Don't forget. And on that note, let's go to Chris's next one, which is EVN, another gold stock. Looks fine, no complaints. We have obviously discussed this last week, I'm guessing, where we said, look, there's some bit of supply coming up, but I probably said the same thing. Looks great, happy holder. Not sure if I'd buy it just on the basis that there's a bit of supply there. I'm probably going to echo those comments today, but it looks very, very solid indeed. No complaints at all. If that's the gold stock you have an affinity with, then go for it. It also has a substantial amount of copper as well. About 30% of its profits come from copper. Did you know that? So you're getting the best of both worlds there. WGX, I did mention this earlier on the basis of why the flip happened. I can't remember what it was, but it was an announcement, and that is the fickleness of the market. This is a compulsory exit here. I mean, is it a species-ending event? It's not far off it. Is it? I'd put to you: is it a minus 1/3 or is it a minus 2/3 event? That's really all we're trying to decide, isn't it? And then I think you've got the minus 1/3. Here's your final third. So for me, NRP or zero risk position, we've often referred to it in the past on that one. I think, unfortunately, we're just looking elsewhere for the time being. Oh, but Carl, it's a great company. It's got all this going for it. Yeah, okay, maybe it does, but I just can't see reason to be involved with it just right now. Oh, Carl, but it'll go back up, and I'll regret selling it now. Okay, maybe you will. I don't know. Or we've just seen 20 other gold stocks that are looking like they're getting the money. They're literally getting the money that was invested here, and that money's going to other places. All the gold sector, says Chris, but we've done the gold sector to death. Please don't make me do any more gold stocks tonight. I beg you. On that cheery note, let's finish off this evening by heading over to the US ones, and hopefully I can do these very quickly. I'm going to go up to here. I'm going back up the list now, so if you type anything in, I won't see it. Okay, we've done all of those. In the USA, they're going to Matthew, VLO. I have changed the screen. Looks great. Valera Energy. So many wonderful candles here to get you in earlier than right now if you had it. 100% holder. If you don't have it, I should say, let's have a look at, is there anything sinister lurking out there? Nothing to worry about. Not fussed at all. Could I add risk on the basis of those last few candles? I don't think there's any rush to add risk on this one. Maybe next pullback, little lower shadow, little white candle into 180. The next little hook higher, allow that light green zone just to catch up to it a little bit. Gives you maybe even slightly better entry, a tighter stop you can place. Probably not chasing it right now, but if I had it 100% happy holder at this stage. General Electric, which is coming up. That one there. Oh, that's not it. That's Switzerland, GE. Did General Electric change its name to GE Aerospace? It did it hive itself off? I haven't been following it. Holy moly. But it can't be. It did. Yeah, it can't be the old General Electric, which was a piece of junk forever. This is obviously the good stuff in this one. Oh, so look at that. If you follow General Electric for any period of time, you know it was an old school, lumbering behemoth. This thing is incredible. Happy holder, no doubt about it. I could add risk to that. I could add some risk to that and take it into 200. It just looks amazing. How about that? We talked about a little bit of trepidation on the indices, US indices, and then you see a chart like that and you say, well, that is just going in gangbusters. NRG looks very, very good. No complaints. If I had it, I could hold it. I'm not sure if I'm going to rush out and buy it. Oh, look, that last little candle, that second from last candle. Look, it's fine. I'm being a bit pedantic, I think. Let me go to here. I'd prefer if it wasn't there. Look, that's all gangbusters, isn't it? Nothing to worry about there. Yeah, I can't see any reason why you couldn't add some risk to this if you're targeting this particular sector. Yep, no complaints at all. It's not too far from the green zone. Price action's good. There's just a little area here, but then it closed so well on Friday. So no complaints. I'm almost trying to talk myself out of that, but just have to sometimes just remind myself. No, you got to remember this candle here. We're seeing this black candle, this second from last black candle. That was that huge wipeout, wasn't it, in US indices? That was Thursday, so that's why that's there. And maybe also on a subconscious level, it's there on a case-by-case basis as well, just to put a little bit of doubt in our mind as to all there's supply there, and that supply is, obviously corresponding with this supply. This one I'm not as keen on, just simply because this giant black candle scares the pants off me. If it wasn't as giant and black as that, I could get it out of my mind and say, well, it's close enough to it that we're kind of not worried about it. You've heard me say that before. I'm still worried about it. I still want to see, I think, a little bit more interaction with the supply that is, I think will be there. And on that basis, let me just give it a candle or two. But hey, if you've done the research on it, you love the stock, everything else is fine. That's the only thing I'm worried about. For you, I think that was Matthew that asked that question. It was as a turnaround play. Yeah, absolutely, as a turnaround play. It's a really good setup, don't get me wrong. I'm just worried about that giant black candle for obvious reasons. Let's go back up. I've been stuck on the gold chart for ages. Sorry, we're going back up the list now to where people were telling me to change my screen. And I'm going up to Jason, AAON. Ah, lovely, perfect. Tight, coiled spring off the light green zone, big white candle, taking out, see this, it's great. I'm so glad we've come from the last one to this one. Now, this candle is not as horrific as the last one, right? But it still is giving me that reason for pause. It's the same concept. It is big as it is important. You can see what it manifested after it. We come back. We don't go straight through it. We show supply. We manifest supply at that level. Not once, couple of times, but we're through it now. And I'm so lucky that we've gone from the last one, RSI, to this one, because I think it just helps explain my trepidation on the last one. If the last one ends up looking like this, then there's no question it's going to be fantastic. I think this is fantastic. No complaints on this. This is the best setup I've seen all day. And again, I cover my ass. Having said that, tomorrow I don't know what's going to happen next. All I can tell you is that people really love it right now. ACGL, Arch Capital Group, ditto. I don't need to spend much time on this one. I need to spend 20 seconds on it. So when I get to the recording, the YouTube will be able to give it another little link, a little skip link. And I think I've sufficiently spent 20 seconds on it because all I can say is ditto. Plus 1/3 for me, no complaints at all. Jason also picking up Matthew's GE, which looks amazing. GMS, which I'm guessing is going to look pretty good. Yes, and it does. Again, we can see the manifestation of that Thursday candle in there, which is, again, just playing on my subconscious. It's like, there's something about that I don't like. Let me go AAO in again and just see that second from last. Oh, it's there. It's there, but it's not as substantial, and there's a lower shadow, and it's just dwarfed by that one. I'm really looking at the Thursday candle here, because if you were good on Thursday, what does that say about how good you actually are? I've gone to the same place. ACGL. I just want to have a look at these Thursday candles again. ACGL. See, really, I mean, it's there, but it's very subtle, isn't it? So if they weren't good on Thursday. Let's not go that far, but they weren't that bad on Thursday either. GMS, whereas we get to GMS, and it was a bit more substantial on Thursday. Oh, maybe I'm being pedantic. Look, that's fine. No complaints. Plus 1/3 there. But hey, if you are comparing, it's going to be very subtle things that you'll be comparing against. If you can't take them all, which one do you then go over the other? And this one is probably in line with the other one. But again, no complaints. Plus 1/3 on that one. But trying to give you a basis on which to compare and contrast. And look at that. Look how insignificant Thursday was there. Totally insignificant. Did not matter. We actually looked at this last week. I'm pretty sure I told you 1/3 on that one. So adding 1/3 on that one as well. Jason, very, very good. No complaints, no round numbers to worry about on that one either. Thank you for those, Jason. Excellent setups. Let's go to Walmart for Michael. Big cap stock, US stock, reflection, obviously, retailer, reflection of what's happening on the ground with the American consumer. And ironically, Thursday's candle actually was completely insignificant, but I'm more concerned about what's happening prior to Thursday's candle. We've got lower peaks and lower troughs. We've got predominance of black candles, I think, coming in. Last night's candle, the rest of the market was up, and it kind of reflected that upper shadow there in the broader market. Short-term trend is changing. A little bit concerned about that one. Look, if I had it, we always talk in these terms, if I had it, I'd be concerned, certainly, on a close beneath that level there. I'd be managing my risk. And I think, given we're already lower peaks, we've taken out that trough. I don't think you're doing 1/3 there. I think you kind of have to play catch up a little, and you're going to go at the very least minus 2/3, and then you might only have plus 1/3 hanging in there on the basis of that long-term trend. But I think even that third is probably going to go beneath an area maybe there, or certainly under there probably for the other one. So plus 1/3, and I might even have moved the wrong one, so let me move it back. The next one for you is, I always lose my place. There's hundreds of requests here. ENS, Michael, ENS. Oh, this one is not what I expected to see. It's very flat. it's not really setting up for a turnaround play, is it? I mean, it never really got above that long-term trend ribbon and made a trough above there. So I can't see the turnaround play. I can't see an aggressive setup anywhere either. And if anything, I might be looking for a short here on the basis that it's failing to stay above the long-term trend ribbon. It might even break down back beneath it. So let me go read your comment. You haven't given me any clues on that one. Look, no, if I had it, I wouldn't have it. That's the thing. If I had it, I would try and rectify that situation and not have it. If I don't have it, I can't see any reason to buy it. It's not a screaming short either, but no, not me, not for me, that one. So I'm going to just go to your next one, which is BV. Brightview Holdings, got a match on that one, and I can see why you're interested in this. Let's look at Thursday's candle there, which is huge. White candle. It did start lower though, didn't it? But then powered back. I like this one. Yeah, look, no complaints at all. Happy holder if I've got it. Absolutely ecstatic if I've got it. But also happy to add risk on this one. This is, look, as good as any of the other setups that I've seen. Let's just quickly double check if we've got anything out here. Well, we do though. So it's a bit more of a turnaround play, and we're getting a bit close to some of this supply. We're probably going to find around 14. So on that basis, whilst that's a knockout, I might then defer. If I had to pick between this one and one of the other ones we had earlier on, ACGL, and the other one which was even better, which came before that, which I can't remember, AAON, I'd be going for AAON over this one. But no, it's very good. But again, that shows just maybe floor is maybe too strong a word in your method there, Adonis. That just clicking on that W just to go back and see what might be lurking out in the corner of your eye. This one is no complaints at all. I'm just going to go there. That's very good as well. So no complaints at all on any of what I see here on this one. Happy holder if I had it, and would happily add a third if I didn't. CENX, going to look at that one. And there's your Thursday candle. There's your Thursday candle. I mean, if we can do that on Thursday, if the market starts to go crappy again, what could it do? Century Aluminium, we said aluminium prices were starting to rally. Oh gosh, this is commodity stock, isn't it? 101, the epitome of commodity stocks, where you rally while stuff is good, and when stuff is bad, you're bloody awful for ages. But starting to look good again. Maybe, yeah, look, I don't know. Maybe that Thursday candle is just a little bit too much for me at this stage. Look, if you've got it, I'm a happy holder. I think I'm going to pick a few of the other ones, though, that I've seen tonight over that one as well. I'm looking at the distance between it and the light green zone as well, okay, as maybe just finding that one thing that can help us differentiate between this and a few of the other ones we've already seen today. AROC. But if that was the only chart I saw today, then it looks fantastic. This one's fine. It's slower and steadier, but I like that. It's closer to the light green zone. The trends are impeccable. The price action's impeccable. The candles are very good. Thursday's candle didn't even rate, and that does impress me. Hopefully you're getting the gist of this. Find that big down day on the market, and then any stock that didn't go down on that day, think about what that says about the underlying demand in the system for that stock, and really the lack of care about what's happening with the Fed and interest rates and anything that might be worrying the world. It really didn't worry this one. So that gets a big tick for me on that basis. Otherwise, I'm going to adjourn there. I'm so sorry about stuffing up that screen earlier on. And I'm actually regretting I did the BHP case study, because that sucked. But it does show this is unscripted. I just answer the questions you put in front of me and do my best to try and make sense of it all. Let me head over here. Disclaimer. So nothing's set up in advance, right, to prove my point. Before you go, remember that everything here is just information. Consider it carefully before you act upon it or seek help to its appropriateness for your situation. Investing is risky. Hey, we've seen a whole heap of crazy charts tonight. We know that things can go wrong. that announcement could come out tomorrow in the best looking chart, a la BPT and WGX, and got a big hole in your equity curve, unfortunately. But that is the reality of markets, and you've got to cop it and roll with the punches, unfortunately. And don't dwell on the fact that you copped one or two if you had them both, because I think if you really do objectively look over your trading over a long period of time, you'll see that those things pale into insignificance, I hope and trust. It's been a pleasure chatting with you this evening. All the best for your trading and investing until we catch up again. Bye-bye for now.